Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for the S&P 500. The date is April 5th, 2020. If you want to stay up to date with all of our S&P 500 and other currency pair and commodity videos, make sure you click that red subscribe button on the bottom right-hand corner of your screen. Okay, so we're looking at the weekly chart here, meaning each one of these candlesticks, red and green, represent 1 week of price action. We also have a sentiment marked out. My sentiment right now is mixed to bearish. Okay, so meaning while the numbers don't really paint a clear path yet or like analysis in some regards, I don't think price is going to go up anytime soon. So I guess that's what I'm trying to say. Let's talk about that. After our big sell-off a few weeks ago, we saw the strong bullish candle, right? That how we entered last week. But the body didn't close above this kind of like, resistance area around the 2600 mark. But then this last week we saw a rally, but it was a failed rally. And even though this is a bullish candle, the body of this bullish candle closed below the high of the previous week. Now, had this body of the candle been up here, I would have been bullish and more like, oh, we're going to see, the V, as people talk about. I don't think we're going to see that. I think we're going to see price possibly more sell-offs and cool into this. This should be 2,000 to 2,600. 2,000 to 2,600 range. Now this is just a composite index, so that doesn't really tell you what is going to drive those numbers down, but it's just more of an indicator. So this just shows to me that there's not enough confidence in the market yet to make it a bull, and that price could just kind of hang out in this range for a while. We just range trade. So up and down, find the floor, find the ceiling, but no significant action to break it through. Now, this is our steep trend line from 2009 after the big sell-off. This was our kind of quick 1, 2, 3. So if we think about this trend line here, 1, 2, 3 touches, 4 touches. That's a pretty valid trend line. We think about at least 3. Okay. But after those 4 touches, we see that this last time price has yet to kind of come back in this channel. If it doesn't do that, it's really going to enforce the bearish scenario. Now, if we see some hot buying this week and price does push above this, who knows? But let's say we get past this initial trend, our initial trend phase. Price could average out, and we see a broader, trend kind of play out, the broader scope of things. But really now we're moving below the average. So yeah, mixed to bearish. Let's go ahead and look at this week and see. Here we go. We've got our daily candles moving below the fast-moving average. That's another bearish scenario, which reinforces a possible visit to 2141. Looks like we could have a bullish flag going on, right? We think about price where it gets stuck and ends up popping on the top, but for right now, this does look like a bearish scenario. So we'll see what happens this week. Anything above 2,600, I'm a little bit more bullish. If we see above 2,800, I'm even more bullish. Okay, everyone have a great week. We will talk soon.